Hey, welcome back. Today we're going to be going over crypto ETFs, and we're going to figure out if it's a right strategy to put into your portfolio. Now, a lot of you know what ETFs are. I've got a lot of videos on my channel about that, and I'd encourage you to look at it. But how does a crypto ETF vary from a traditional ETF that carries stocks, bonds, equities inside of that? Well, a crypto ETF in general is an exchange traded fund that tracks the price of one or more digital tokens. So it's Bitcoin, Ethereum, Solana, Dogecoin. There's several out there that will track the performance of those underlying currencies. But what does that really mean? Do you really own the crypto? Is it a futures contract? What is a futures contract? Shouldn't you just buy the coins yourself? Shouldn't you store them on your own? What does that actually look like? I think it's important to set a baseline. So what is a crypto ETF and how does it work? This article was published back in September of 22, so almost a year ago. And I think it does a great job of breaking down some of the fundamentals of a crypto ETF and how it differs and what are some of the pros and cons. So first, a crypto ETF is just a fund, an exchange traded fund with an expense ratio, which we're going to go over in a minute, that invests in crypto ETFs, deploying and blockchain technologies, things like that. But it's also got things like Ethereum or Bitcoin, and a couple of those are Bitwise or Grayscale ETFs, which I'll talk about in just a minute. But in general, it says here their ETFs are extended use case of blockchain, and some of those came out. I think the earliest one came out in 2017. On October 18, 2021, the BITO, which I've got here to look at, it did start trading Bitcoin ETFs. Valkyrie and Van Eck are some of the other ones. However, there are no ETFs tied directly to the spot price of Bitcoin. One of the things I want everyone to understand is you don't actually own the Bitcoin underneath it. So there's no physical asset you're owning, of course, but you don't own the coins. And I've done several videos on my channel. I'm going to put a link up here for one of them where I walk through how to actually buy crypto, save it to a digital device, something like this, that you actually own versus buying into an ETF. Now, again, there's pros and cons, so let's talk about those real quick. One of those is if you actually buy a crypto and put it on a drive like this, you actually own the private keys. There's a public key and a private key. You own that. Number two, you're able to move those assets around as you please. So if I want to swap out Ethereum for Bitcoin or Bitcoin for Solana or Solana for Bitcoin or whatever I want to do, it's much easier to do that when I actually own the coin itself versus an ETF. Now, another thing I want everyone to be aware of is the expense ratios from some of these. So I'm going to come back to this article in a minute, but I did pull up 5 of some of the biggest crypto ETFs out there, and just put them in a spreadsheet. Nothing fancy here. One of the things here from an expense ratio standpoint is you don't see anything nearly as low as you would see in something like a VTO or a VOO or really any other ETF out there with an expense ratio that typically stays 0.25 or below, so 25 basis points. Some of these ETFs are approaching 100 basis points, so 0.95, 0.85. You do have one that's 0.50 here, the Global X Blockchain and Bitcoin strategy. But these expense ratios here, it would really give me a lot of caution. Even if I wanted to invest in crypto through an ETF, these expense ratios make it very, very difficult. Another thing, there are no dividend payouts from a crypto ETF. So a lot of people that buy into traditional ETFs that are dividend compounders or dividend kings, whatever you want to call it, they're used to getting their dividends. You're not going to get that through a crypto ETF. There's no dividends that are paid out, at least not yet. Doesn't say there won't be, but the underlying asset has to appreciate. And the only way it appreciates is from the ability or disability to starve out a resource and create a supply and demand access or ingress or access in order to drive those prices up. But the underlying products under these ETFs are just, like I said, Bitcoin, Ethereum, Solana. The practical use case of those today is very limited, which means the price of those, could continue to go up or down. There's no underlying asset to pull a dividend from because there's no actual use case being delivered. Again, at least not yet. So I go back to this article and let's go look at some of the benefits. So you're investing in a ProShares, in this one, ProShares Bitcoin, the affordability element to invest in an asset pool. So I do like this. If you want to invest in crypto and you don't know what to invest in, you don't want to pick individual coins, you don't want to pick individual assets underneath, this could be an option for you. I'll bet, looking at what the expense ratios are and what that means for you and how that will affect your returns compounded over time. Number two is the learning curve is outsourced to analysts while investing in currency ETFs. Something for beginners or novices. Just make sure you go over the perspective, which I'm going to do in just a minute. You don't have to worry about custody charges and network and transaction fees. That's true, but you're also getting hit with a very high expense ratio. So don't let that fool you into thinking that it's something you should just, that it's free, because it's not. Nothing's free. An ETF provider is responsible for the safety of the fund. Yes, I do like that. So again, when you hold your own crypto, you're responsible for it. So I have Ethereum, I have Bitcoin, I have Solana. On this drive here, this Ledger drive, which I've done videos on, when I plug this in, I connect to the Ledger instance and I can move things around. However, as soon as I pull this out, I have the private key on here. No one can access this. So this sits here on my desk. There's no way anyone can access the private keys. It's not connected to the internet. There's nothing there. That's a responsibility I put on myself. I happen to be okay with that. I understand the risks. I'm good with that. But for a lot of people, they don't want to have the hassle. They don't want to deal with it. And I totally get that. So that could be something to look at. Are they safe? Well, TBD. It all depends on the ETF. It depends on the broker. It depends on the security level. There's no quick answer, yes or no, of what that could look like. There are regulations. There's more regulations coming out in the United States for sure. You're now starting to see spot price or spot pricing or futures contracts for Ethereum, which I would caution anyone who's looking to do that. Be very, very careful what you're doing and make sure you completely understand what you're getting yourself into. And then in just a minute, I'll talk about how you can invest in it. But you can open an account. There's Fidelity, there's Robinhood. Actually, I'm going to jump over here now and actually look at one of these crypto ETFs. So if I look over here, this is ProShares Bitcoin Strategy ETF, BITO. This is this one right here. So it has an expense ratio of 0.95. If you look at the max for this one, it's actually down 63% lifetime. May not deter you. I do like the fact that at least this brokerage, Robinhood, puts a disclaimer on here. Fund does not invest directly in crypto, and its performance may differ from the performance of the asset. It does incur risk and the possibility of loss. It's extremely important. I want to stop there and make sure everyone understands. Crypto is extremely volatile, whether you have it in an ETF, whether you own the individual coins, and especially if you're doing futures contracts on ETF, the volatility is insane. Now, for some people, that's great. They can buy in and out of the stock as the price moves up and down and make money. For 99% of people, that's not going to be smart. That's not going to be good. If you're working with options contracts and you go short and the price of an underlying asset like a Bitcoin or Ethereum starts to go up, your losses could be infinite. I do like the fact that they have this here, and it does tell you that it's index tracked and it's a digital asset. But this is what it looks like on something like Robinhood. And then, if you want to buy something like this, you can go in here, put in the dollars amount that you want, and then pull it from a brokerage account or wherever it is, and then review order. You can also trade options. Again, like I've said, be very, very careful when you're doing something like this. Options trading on ETFs, normal ETFs that are equity backed or ETFs that just have stocks in them is also, there's risk to that as well. You can do this, just make sure you understand what you're getting into. Okay, so let's actually look at one of the prospectuses of a Bitcoin ETF. Again, this is BITO. I'm going to keep it very consistent here. This seeks capital appreciation. Sounds great, right? It provides a familiar way to exposure to Bitcoin linked returns and the transparency of an ETF. Okay, sounds good. It's the world's largest. Yeah, it's fine. It's a diversifier to traditional assets, an alternative to conventional currency, an alternative way to seek capital appreciation. All right, sounds great. Let's look at the performance. We already saw that. Let's look at the market price, 1 month, 3 month total returns. Inception date was back in 21, so we don't even really have 2 years of it. Here's the ticker name, and then we can see the net asset value. It's up a little bit. Now, we actually look down here, what's in the holdings. If I go to show all holdings, you've actually got treasury bills, you've got Bitcoin futures, and you've got Bitcoin futures that are expiring at the end of next month, end of this month. We're in August, and the end of next month. So all they're doing in here is they're buying up Bitcoin futures, and they're making sure, and they're trying to profit from it. Again, very risky. There's some volatility there. But I think the one thing I want everyone to understand about something like this is, if I go back down to, I don't see where it is in here. Oh, here it is. The expense ratio, 0.95. That's almost 10 times what you're going to pay in just an ETF that tracks a market-weighted index fund like an S&P 500. That expense ratio would immediately put the brakes on for me. And then given the historical return of this, you're down, if I go back here, you're down, I think it was, 60% from October 21. And I understand that's not necessarily the funds issue, but if you were going to buy, now could actually be a really great time to do that. As I move over here in the prospectus, I want everyone, I did a lot of digging so you don't have to. One of the things I want people to understand is right in the beginning, they are calling out the fact that they have a very high, well, not a very high, but for them, the fund operating expenses, the expense ratios, 0.95. But also here in the investment objective, there can be no assurances that the fund will achieve its investment objective. Okay, so if you go to invest in this, you need to understand there's no assurances that will achieve its investment objective, sure. But they're putting it, number one, right in the beginning of the prospectus, which I do like, and I'll link this perspective down in the description if you want to deep dive into it. I like how they're honest and they're upfront about it. However, there's a lot of other ways to make money besides these ETFs. And I'm not completely bashing them, but given the expense ratio, given the investment objective, and given the historical returns, I don't see this as a very active portion of my portfolio in general. And I typically have a very high risk tolerance and time horizon in my investment objective. If you go down here, it tells you they do invest in short-term cash interest that have a remaining maturity of 397 days or less. These are treasury bills and repurchase agreements. Repurchase agreements are primarily used by the fund as a short-term investment vehicle for cash positions. They can move in and out. They do talk about the risks here, that they're new investments. They're subject to unique and substantial risks. One of these is strategy risk and Bitcoin futures contracts that provide exposure to Bitcoin futures. It does say here, it does not invest directly in or hold Bitcoin. The price of Bitcoin futures should be expected to differ. Basically a lot of volatility, and then here, number 2, it goes into volatility. Liquidity risk. Typically, I don't see a lot of issues trying to unload Bitcoin or Ethereum or Solana or any of the crypto assets, but it could be a liquidity event where you're unable to unload and your assets are illiquid. There's Bitcoin risk, of course, and then there's some other risk. If I looked at this and I didn't know anything about this asset class, based on the principal risks here in this prospectus, and again, I'm not expecting everyone to read a prospectus, there are a lot of risks with this. There are a lot of risks that you don't have any control over, a high expense ratio, and a terrible historic return, even though it's only been 2 years. The management fund here talks about about that, and then tax information. Income and capital gains distributions you receive from the fund generally are subject to federal tax. Depending on your tax situation,